Welcome to The Explainer. The stock market is lighting up with hot new IPOs, but it looks like not every company is getting an invitation to the party. Today, we're diving into why StubHub, a brand we all know, is getting a surprisingly chilly reception for its big debut.
So, after a few pretty quiet years, the market for initial public offerings, IPOs, has just been thrown wide open. It is roaring back to life, and Wall Street is buzzing as all these new companies are basically racing to go public.
And we're not just talking about a trickle here, it's a flood. We're seeing companies like the payment giant Klarna and even firms in riskier sectors like the crypto-focused Figure Technology just see their stocks pop on the very first day of trading. It's creating a ton of excitement and some really big, quick profits for the early birds.
Okay, so let's get into the mystery here. Because with all this excitement in the air, you'd think a huge, well-known brand like StubHub would be one of the hottest tickets around, right? But that's just not what's happening. So, what gives?
To really understand that cold shoulder, we've got to first understand the company itself. What exactly is StubHub, and what is this whole IPO really trying to accomplish?
I mean, they've been around forever, right? Founded way back in 2000, StubHub pretty much invented the modern online market for reselling tickets. They are a giant in this space, controlling nearly half, almost 50% of the entire ticket resale market in North America.
And they are not thinking small. The company is aiming for a massive $8.6 billion valuation right out of the gate. The goal here is to raise about $800 million in fresh cash. And these numbers really put that huge valuation into perspective. I mean, look at this. We're talking about a business that handles almost $9 billion in ticket sales, which generates almost $2 billion in revenue and hundreds of millions in profit and cash flow. So on the surface, it looks like a monster of a business.
But here's where the story takes a turn. Despite those really impressive numbers, StubHub is sailing directly into some pretty powerful headwinds that are shaking up the entire industry.
And you don't have to take my word for it. Even StubHub's biggest competitor is admitting that things are tough. This is a quote from the CFO of Live Nation, that's Ticketmaster's parent company, saying flat out that the resale market, especially for sports, is weak right now. So this really is the perfect storm that StubHub is facing. You've got weaker demand from consumers, new government rules forcing them to show all those fees up front, and even major artists are actively fighting back against scalping. And this is all happening while they're in a constant, brutal battle with the behemoth that is Ticketmaster.
So the big question is, how is this all hitting their bottom line? Well, take a look at this because it's pretty telling. In the first half of this year, their sales were up a decent 11%. But their adjusted Ebitda, you can just think of that as a rough measure of their operating cash flow, it actually fell by 26%. So why? They're spending a ton of money on marketing just to compete in this tough environment.
Which brings us to the core issue, the big, multi-billion-dollar question for any potential investor. Given this tough market and their shrinking profits, is StubHub just asking for too high a price to get in on their stock?
Well, when you put it side by side with its biggest competitor, the numbers are, well, they're stark. StubHub is asking for a valuation that is 30 times its annual earnings. Live Nation, which is already a public company, trades at a multiple of just 17. So by this key metric, StubHub looks incredibly expensive.
So how do they possibly justify that premium price? Well, they're pointing to the future. The company is telling investors that it can dramatically boost its profit margins from about 12% today to a massive 35 or 40%. But wow, that is a huge leap, and it seems really optimistic given all the pressures we just talked about.
All right, so let's wrap this all up. For investors who are trying to size up this IPO, what's the big takeaway from this whole story? It really boils down to these three things. The company is trying to go public in a really difficult market. Its profits are under serious pressure from all that heavy spending. And on top of all of that, it's asking for a very, very rich valuation. That is a tough combination to sell.
You know, ultimately, the StubHub story brings up a really fascinating question for any investor. When a company goes public, what's more important? Being a famous brand that everybody knows and loves, or having the nitty-gritty financials and a healthy balance sheet to back it up? The cautious reaction to this deal seems to be giving us an answer, and that's the thought we'll leave you with.